20-minute trader technique revealed. How to trade for 20 minutes a day. This is the do-it-yourself 20-minute trading lesson. If you watch this video all the way through, this alone can act as your manual for learning how to trade using the 20-minute trading method without ever needing to sign up for anything. This is the simplified version of what we believe is the highest probability trading strategy that exists, probably the most tested and researched in any field of trading. The technique normally requires practicing each individual element and watching a few hours of training videos, but today I'm gonna give you the simplified version that anyone with even basic trading knowledge can start testing this out immediately just from watching this video. And if you're going to, please use paper trading, use fake money, and make sure you are consistently winning before you ever consider using real money. Because all trading involves risk, and any money you put into trading can be lost, so keep that in mind as you get into this. The trading system can be traded almost any time. At night, in the morning, in the middle of the night, early in the morning, during the day, or in the afternoon, almost any time from Sunday night to Friday afternoon. This is how we trade. There are 3 lines on the chart. A blue line, the one we are actually trading, an orange line, and a white line. The blue line represents the value of gold. Specifically, we like to use what's called gold futures. The orange line represents the value of the Dow Jones Industrial Average, which is made up of 30 of the largest companies across the industries in the United States of America, like Nike, Walmart, Home Depot, Visa, Disney, Apple, and others. And what it represents is essentially the average of the stock price values of those companies combined into a single index. It's one of the oldest and most widely used indexes, and we use it as our navigator in this strategy. The third line is the white line, which is the Relative Strength Index, or RSI. For those of you who are more technical, our setup uses 1-second charts for the price action, but a 5-second setting for the RSI. If any of that sounds confusing or overly technical and you want help setting it up or understanding it more deeply, the 20-Minute Trader program has a community and a mentorship system designed specifically to walk you through all of this step by step. And you can learn about that through a link in the description for a free web class where you can get your questions answered live if it's currently available. Now let's get into the actual strategy. What we do is we look for a short-term trend in the blue line, 1 or 2 minutes long. And we also look for a short-term trend in the orange line, same amount of time. What we want to see is a divergence, meaning the 2 lines are either moving in opposite directions or clearly separating from each other to create an opening. And that divergence tells us which direction we want to trade. For example, if the blue line is trending upward while the orange line is flat or moving downward, that divergence suggests that we look for an upward trade. If the blue line is pointing down in relation in trend to where the orange line is pointing, that means we're gonna look for a trade that profits downward. One of the most powerful aspects of futures trading is that you can profit in either direction. So if you believe the market will go up, you can take a position to profit from that. But if you believe it will go down, you can also take a position to profit from that drop. Of course, if you're wrong in either case, you lose. So the goal is to find a high probability setup where you can be right more often than you're wrong. And this is where risk management comes in. What we do is we set it up so that on each trade we will win as much as we will lose, so that our stop loss and take profit are equal distances from each other. Meaning if we're risking $200, we're also aiming to make $200. Your take profit order is an automatic order that closes your trade when you reach a desired profit level. Your stop loss is an automatic order that closes your trade when the loss reaches a predefined level, protecting you from bigger losses. Now let's walk through a real example so you can actually visualize this. Now imagine you're watching the chart and you see the blue line trending upward for about 1.5 minutes while the orange line is trending downward. That's your divergence, and it tells you you're looking for a long trade, which means that the trade profits when the blue line moves upward. Now you shift your focus at that point to the RSI, and you see that it's been sitting in the upper range. Suddenly it makes a noticeable downward pop. Not a tiny wiggle, but a clear move compared to its recent behavior. The moment that happens, we enter our trade within 1 or 2 seconds. Then as the pattern plays out, the blue line pushes upward, hits the take profit, and we exit the trade often within 30 to 40 seconds. Sometimes faster, sometimes up to a couple minutes. After that, we decide whether we are done for the day or taking another trade based on our plan. So to summarize the criteria very clearly, number 1, you identify a fresh divergence between the blue line and the orange line using about 90 seconds of trend. Number 2, that divergence tells you the direction you want to trade. Number 3, you wait for the RSI to move meaningfully in the opposite direction of your intended trade. Number 4, you enter quickly and manage your trade with equal take profit and stop loss levels so that you only need to be right more than you are wrong to be profitable. I did a recording of an actual trade here for you to watch and see what it looks like in the real market. As a demonstration of me trading gold for real, I'm looking for a divergence. I have this blue line pointing up the trend, and I have a divergence between the blue line and the orange line. The orange line is not as pointing upward as the blue line. Divergence is pushing upward. Now I wait for this white line to be oversold to show that it's oversold, and then I'll buy.
Order filled.
There you go. I'm gonna change this setting to aim for about $100. And what's cool about this platform is you can protect your trade if you want. You can put the stop loss here. I think it's gonna drop a little and then shoot up. Right now we're at about plus 25. I can actually protect my trade and lock in at least $25. Okay, now I've locked in at least $45. So if it drops, I hit 45. If it goes up, I hit 110. We're at 85 right now.
Order filled.
We just hit 110. So what I did there was very simple. I noticed the divergence with the blue line pushing upward. And then I waited for it to be oversold, which means this little white line down here dropped a little bit. And I jumped in and it popped upward. Now, if you wanted to actually use this video as your starting guide to get into 20-minute trading, here's exactly what you would do. First, you would set up your chart and learn how to use it. The platform we like is TradingView. We actually have ways to get you maximum savings on TradingView accounts because there are different tiers, and the one we use is the premium plan, which allows 1-second charts and the ability to run all 3 of these lines together. If you want that special link, you don't even need to be a member of the 20-minute trader club. You don't even need to pay anything. You can just go straight to 20mintrader.com, hit the chat bot and ask for the TradingView link. And yes, we get a small commission, but you get the best pricing available as a consumer. Step 2 is learning how to identify those short-term trends of roughly 90 seconds to 2 minutes on the blue line compared to the orange line. If you want help with that, members of the Gold Pattern Club actually get access to proprietary widgets we built and programmed that visually show these trend lines on your actual chart. Though you can absolutely figure this out on your own if you prefer a DIY approach. Step 3 is practicing the full sequence of identifying divergence, waiting for the RSI signal and entering quickly. And you would do all of this on a paper trading account until you are consistently profitable. I want to share something that might really excite you. At the time of this video being recorded, we are actually doing live trading, showing this exact pattern almost every single day, usually through the day, starting at 9 a.m. Eastern on most social platforms. So you can literally watch this strategy happening in real time in the live markets from the platform and even play along with your own paper trading chart if you want. So if you're watching this and thinking, I want to see this in action, there's a very good chance you could jump and watch it live right now. That's been a huge part of why this system has really taken off, because people can actually see it working. On top of that, we've done extensive research on how people learn trading through research and discovery labs, boot camps, and direct interaction with thousands of traders, where we identify exactly what people struggle with and help them debug it, which has led to a knowledge base and system that produces a win rate by survey nearly 6 times higher than what most institutions report as average for day trading success. The big reason why 20-Minute Trader has become so popular and is quickly becoming the go-to for people entering the trading world. We have a ton of additional content breaking down every aspect of becoming a confident and consistent trader, and we're gonna keep releasing more to help you master this, or you can get your free ticket to the web class and get your questions answered live. The link is in the description. And with that said, I'll see you in the next video. And don't forget to like and subscribe so you can keep learning more about 20-minute trading, a movement that has taken the trading world by storm. See you in the next video.